Well, good morning to you all. Tony Virtue speaking, Virtue and Partners. This morning in conversation with Matt Booker. Matt is the founder and portfolio manager of Spheria Asset Management, one of the main small company managers in the Australian market. So welcome, Matt. Thanks for joining me this morning.
Yeah, thanks for having me, Tony.
No, it's brilliant to see you. Might start by giving a little bit of a background as to how you got started in funds management and a bit of your history.
You're going back a long way, Tony. But
not as far as me.
No, maybe not that far. But in the 90s, when I was doing my studies, I read a book about Warren Buffett and got very interested in investing from that book. And, that's, I guess, stuck with me for the years. And, I've held to those fundamentals that Warren Buffett has. So that's how it started, was the genesis. Mm-hmm. I moved from basically working at an insurance company where I was in the actuarial department to moving into stockbroking research and finally into funds management. So I've been running small cap portfolios since 2005. So I've had 20 years running small caps in Australia.
You might explain to the listeners, what is the small cap universe? What's your idea of what you can and can't invest in?
The definition can vary, but in Australia, the definition generally is outside of the top 100 companies in the market. So, they're less well-known companies. So it's not the BHP and CBAs of this world. It's smaller companies like a Bega Cheese or something of that size where it's, probably less than $2 billion in terms of market cap.
Very good. Yeah. And tell me a little bit about Spheria. How's that all work?
Yeah, Spheria's been founded 9 years ago. So founded it with Marcus Burns and Adam Lund. So we came out of Schroders, where we ran the small cap and micro cap funds for a number of years there, and we had a lot of success at Schroders. We joined up with Pinnacle and they provide us services in terms of marketing, distribution, back office, etc. So we can just go about investing, which is what we're passionate about.
And tell me a little bit about the difference between unlisted and listed investment vehicles. That's quite pertinent at the moment.
Yeah, so we have a small cap fund, which is a managed fund, which is unlisted. About 1 year after founding Spheria, we listed SEC, Spheria Emerging Companies Limited, and that basically emulates our small companies fund. So basically the same product, one's in the listed environment and the other one's unlisted. The listed environment, you can get machinations around discounts and premiums in the listed environment. And at the moment, the LIC is trading at a discount to its net tangible assets, whereas the managed fund basically is always a parity, if that makes sense.
It does. And I remember that there was a note to the ASX from your chair saying that, if that parity continued beyond 5%, that there would be arrangements put in place to bring that back to par.
That's correct. We put a conditional proposal out there last year for the December quarter. So if it traded outside of 5% on average versus its NTA at a discount, then we would look to convert that into a managed fund or into the managed fund. And so that would move to parity. And so there would be that discount would unwind and shareholders would benefit from that conversion process. We've reinstated that proposal, and it's a calculation now based on 1 year from the 1st of April this year. And if it does trade below 5% on average for that 1 year period, then it will go to a shareholder vote and potentially convert into the managed fund product. And so that discount will alleviate, and then shareholders win from that.
And to some extent, the market works that out and kind of squeezes it back up to those numbers anyway.
That's the hope, that it's kind of self-fulfilling, because we do like the listed product. It is a closed-end product, so money is effectively not stuck in there, but it's stable. And in our unlisted product, money comes in and out.
Yes.
And at times when markets correct or dislocate, then money tends to go out, and that can make it hard as an investment manager to manage that portfolio. So we don't have that issue in the listed product.
Well, I know clients are very keen on dividends, and I noticed the Spheria SEC quarterly dividend came in like clockwork a couple of days ago. Just explain the dividend policy and the franking policy.
Yeah, I noticed that as well. I'm a big shareholder in SEC, and so I benefit from that dividend. Yes. So every quarter we pay a 1.5% yield on the NTA, and so that's a 6% fully franked yield over the year.
Yeah.
So
which
6%,
is not shabby.
no,
Not
plus,
shabby.
it's 6% plus franking. And we have significant excess franking credits in the balance sheet. So we have the capability of maintaining that for some time. And also we're accruing franking credits as we go along because we own cash generative companies that pay dividends, but also we pay tax on capital gains. So there's the ability to maintain a pretty high level of dividend yield over time, we think.
And just looking to the outlook at the moment, what are you seeing in the small company universe at the moment?
Yeah, we think the outlook is very strong. The economy has its challenges, but there's significant inefficiency as you go down the market cap spectrum in the Australian share market and probably globally as well. The market has crowded into bigger companies and that has left the small companies behind, and therefore there's a huge valuation disconnect between small companies and large cap companies. And we haven't seen this for many years, and it's at the most extreme we've ever seen it, which means there's huge opportunity in small caps.
And possibly opportunity for takeovers.
Yeah, we tend to benefit from takeovers. We do a lot of work around industry structure, also market positions of companies. So we're buying companies that have strong market shares and also generate a lot of cash. So, you know, that fits the bill for predators.
Yes,
And offshore companies come in here, the dollar's low, they buy smaller companies, trying to build a beachhead into the market, or you get private equity coming into the businesses, seeking good cash flow companies at appropriate valuations. So we get private equity guys coming in as well and taking out our companies. We've probably had over 40 takeovers in the past 9 years across our portfolios.
Okay.
And, you know, I think there is the foundation for more takeovers. We've just had 3 takeovers early this year in the portfolio. So I think there's a construct for more takeovers in the portfolio, given that valuation disconnect that we have down the market cap spectrum and the way we invest.
And you spend a fair bit of time with these companies, getting under the bonnet. And
yeah, we do spend a lot of time with them, and sometimes, you know, we get to see all the warts as well.
Yes.
And at times we have to take action, and we're involved in some companies now where we're looking to change out the board and addressing, you know, misallocations of capital in the business by the board and management. So we're heavily involved. You know, ideally we want good management teams with the business, but it's not always the case, and sometimes we have to get involved where we need to make changes to the companies as well.
Well, that's what you pay to do, I guess. So
yeah, look, I think it's part of the process. Like if there's a good business there and it's not being run properly, and we can add value by changing management or, you know, capital allocation, then that's going to be a benefit to our shareholders.
Fantastic. Well, thanks for joining us this morning, Matt. I really appreciate your time.
Excellent. Thanks for having me.
It's Tony Virtue and Partners, when experience pays, in conversation with Matt Booker, the founder and portfolio manager of Spheria Asset Management.
Thank you.